Commercial real estate is in really rough shape right now. You want to know the number one reason why I know commercial real estate's in rough shape right now? Brookfield, BlackRock, Goldman Sachs, the biggest, smartest asset managers are walking away from office buildings in the United States right now. What does that tell you? That tells you that whatever it is now, it's going to get worse because they've done models, right? They're looking into the future. They have more data than we have access to. They can see more than what we can see right now. And they're making decisions and they're saying, you know what? We've overpaid for this building based on the current market. We cannot hold on to it. And we certainly cannot get the rents we need in order to service the debt on the building. And why can't we get the rents? Because everybody's working from home. You know how hard it is to get people to come back to work right now? You're sitting at home watching this video on YouTube. Do you know how great it would be if people started going back to working from the office for our economy? I know that many people think that sitting at home, they don't have to drive to work anymore. They don't have to drive home from work anymore. They can stay in their pajamas all day. They're going to be more productive. They're going to spend more time on the computer. Listen, commercial real estate got hammered. It's certainly a casualty of COVID and our response to COVID. It will take time for it to come back. The entire commercial real estate problem is from COVID, but it's from two different variables or two different knock-on effects of COVID. One is that we pushed out so much free money into the market and we had to create a monetary policy that was more restrictive and thus increase interest rates. So the people, the companies that own large commercial buildings or real estate portfolios were faced with this problem that their mortgages, just like your mortgage at home, came up for renewal or is coming up for renewal. These big companies who nobody feels sorry for, I get it. But these big companies were faced with the same problem you were faced with or are going to be faced with. Geez, we got a mortgage rate of 2% and now our mortgage rate's going to be 7%. I don't think we can service the debt with the income from this building, even if it was the income that it was before, probably. And now add on to that the secondary knock-on effect of COVID, which was it's okay to wear your pajamas and stay at home and stop the spread. People don't want to go back to work, right? You gave them the opportunity to go and work from home. What we have to come to grips with now is it's going to take time to bring people back to work. We're seeing it start now where Jamie Dimon, who seems to be the barometer of big corporate sentiment in the world, is saying people have to come back to work. And then you'll start seeing more and more people say that people have to come back to work. But it will only be when people come back to work and those interest rates start to come off that market will kind of start experiencing its resiliency. The other thing I'll say is that the United States is like on a hypersensitive pendulum, right? Like Canada's economy doesn't move at the same pace as the American economy, whether good or bad, right? Like the American economy will just hammer out a killer year and simultaneously companies will go bankrupt the next year, right? They're operating like they're Americans, like they're operating bigger and bolder and brasher than the Canadians are for the most part. And that level of pendulum swinging or sensitivity to the market creates larger kind of boom bust scenarios in the United States, and the competition's a little bit hotter for these types of things until the Americans come to Canada and then they start operating and it increases the same sensitivity here. But to get back to speaking to the commercial market, it's going to be okay. But in the meantime, very similar to what we discussed with that Silicon Valley Bank issue, where you've got banks that have lent a bunch of money into these buildings, these land owners, these landlords. And those landlords now, it is incumbent upon them to extract more rental income to service a greater debt servicing cost in the face of a market where demand isn't what they expected it to be because of this massive extraneous event. So that's a challenge. Like any situation where a bank has overlent to a borrower, that challenge becomes the challenge of both the borrower and the lender. There's a really good saying that a friend of mine, David Kasoy, always tells me, if you lend a little bit of money, it's the borrower's problem. And if you lend someone a lot of money, it's your problem as the lender. A lot of money was lent to a lot of these landowners, and it is becoming the lender's problem right now as the landowners, like these massive funds and others, are handing them the keys back and defaulting on these $100 million mortgages. I guarantee you, because of what I said, that because of the sensitivity in the American economy, and because the worker will go back to work, and because interest rates will come back down, we will look back on this period of time and we'll say, man, it was a good opportunity to buy a 35-story building